Today we have with us Upasana Unni, Chief Commercial Officer at Sayata, to have a chat on the insurance wholesale market, cyber insurance, digitalization, and other challenges for the industry. Upasana, great to speak to you today. So first up, can you tell us more about Sayata and what you guys do?
Yeah, so Sayata started out 5 years ago actually thinking about how to help businesses get ahead of cyber attacks. So founded by three really incredible former IDF top secret service type of academy founders, who one of them is a global cyber security expert, and that's our CTO. One of them went to Harvard Business School, that's our CEO, and the other is our Chief Product Officer. So initially, they were experimenting with different ideas about what kind of service they could provide. So it'd be basically a value-added service to SMBs. And then they realized that actually, there's a huge need where, this was 2019. They realized wholesale brokers have a massive pain point around actually being able to quickly place policies for their smaller insurance clients. Now, of course, on a $50,000 premium policy, no broker minds spending a bunch of time emailing and contacting different markets, but doing the same thing for a $1,000 policy doesn't make a lot of sense, obviously. And the effort really involved was pretty much the same. And so Sayata was born as a way for insurance carriers to basically instantly quote, multiple options to a broker who can say, I'm looking for 2 million in coverage and this retention. Here's 4 bits of information about the insured. And we kind of very cleverly bypass the very long application process that each insurance carrier usually has, and helps brokers see the quotes quickly. And once they have seen the quotes, then they can say, okay, I love working with X carrier. I'm going to go and fill out the rest of that application, or have the insured fill out the rest of that application, because that's the one I think we're going to most likely bind with. And so it was a really efficient way for brokers to basically, within 5 minutes, typically, be able to select multiple quotes, present them to their retail agent, who can present it to the client, get back a e-signed application, and then bind. So basically, it was, it's just imagine suddenly there was an Expedia for cyber insurance. And so they started out with about 4 or 5 carriers and built up a BD team, because insurance in the US is still very relationship based. So had some really fantastic early hires who built up a BD organization that calls brokers and shows them what we can do for them. And then it's been kind of a little bit of an explosive growth story since then, because the product was really the right thing at the right time and really met the needs of the brokers where they were. And to be honest, I think none of the other insurtechs really were addressing the needs of a wholesale broker. They were very much focused on either cutting everyone out and going directly to the insured. And like I said, small businesses are not Googling for insurance, or maybe trying to serve the retail agents. And again, the retail agents have a ton of options to choose from. And the brokers were kind of a little bit the ones being left behind, as they, to continue doing business as always via emails and, PDFs and things like that. So I think Sayata became kind of a really terrific way for brokers to do their business more quickly. And then we were very responsive to feedback. So they said, what would be great if my retail agent could just use my link, white label this for me, and be able to enter the risks themselves. And then I can advise them on which options make the most sense. But they can kind of, do the early part of putting in the risk themselves. And that's so we built that and we offer that. And that's been another kind of source of growth. And where we are now is we're going to be going into other product lines to hopefully basically replicate, making it really easy to place SMB commercial business.
Now, great to hear what you guys are doing to streamline things in industry. Now, the term cyber insurance might not be familiar to some. Can you tell us more about what it is?
Absolutely. So this used to be reserved, 10 years ago for the folks being attacked. The victims would be really big multinational corporations that had a ton of resources to pay out. But cyber attacks can take the form of a lot of different things. It can be ransomware, which is one of the most common ones that we see and talk about and hear about, which is typically someone gets access into a company's systems, Potentially, especially if there's no backups in the cloud or offsite, they basically might hold for ransom all of the data in the company systems and say that, if you don't pay me X in Bitcoin by a certain deadline, I'm going to wipe your company's data. And obviously that's pretty devastating, especially if you don't have a backup. And so frequently, businesses would have to pay out. So what cyber insurance is basically one, if, despite having multiple controls in place, which now you need to have in order to get the insurance, someone still does manage to hack into your systems and try to hold you for ransom. There will be usually many insurers are offering kind of a proactive service, to actually see if they can actually push the attacker out, if they can restore from a backup, in which case you don't need to pay out the ransom, basically to see, like, at that moment of attack, what are the options for you. But worst comes to worst, the small business needs to pay. The insurer will reimburse your losses up to the limit of the policy. So it's a very important insurance to have, given that most businesses these days really, and most individuals, your data is almost your entirety of your value, right? Can you imagine, a doctor's office losing health records of patients, or a university system losing social security numbers of students who maybe they're 18 and now their credit can be stolen. So this is it's a very serious potential issue for any business, organization, nonprofit, government entity that has any types of data in computers, essentially. And some of the things that need to be put into place now, thanks to the existence of cyber insurance and learnings from these attacks that have been happening, are certain controls that make it much less likely for an attack to be successful. So things like having two-factor or multi-factor authentication, meaning you try to log into your email, the service will basically ping your phone and say, please confirm it is you, Upasana, logging into your email. And so, unlikely that someone's kind of gotten a control of both your email and your phone at the same time. Not impossible, but unlikely. And there's other things like much more technical where the CTO of a business might be the one who really kind of ensures these things are in place, but ways to detect whether there is an intruder in the systems, whether anything has been done to the data. There's all of these other types of controls that, depending on the size of the business, it is more and more likely that you would have these in place because it's just really important and critical for the functioning of the business. So what cyber insurance does is basically like help support a business in the case of, kind of the worst happens. You have an attack, someone gets phished. Phishing attempts are very, very common. We get them all day, even at Sayata, where someone's impersonating our CEO and hoping someone will send over bank account information. It's shocking how often it does actually succeed, and that's why hackers continue to try it. Again, to be reimbursed for those losses, because of course no one's knowingly providing sensitive information out, but maybe they were fooled. Again, the cyber insurance policy would kick into place and help recover those losses. And finally, there's business interruption, right? Maybe just because your systems were down. One of the most, I think, interesting claims I've heard about is one of the most expensive ones was a bakery that was shut down for multiple days and was a high volume, wholesale bakery. So there were, imagine tons of bread and bagels and everything being distributed across an entire city, shut down for several days. That's potentially millions of dollars of lost revenues, right? And so that is another example of where you ideally would have had a cyber insurance policy in place to help recover at least some portion of those losses from the business interruption. So there's many aspects to a cyber policy, right? And so getting all the coverages in place that make sense for the size of business and the scale you're at and the level of risk, because again, businesses or organizations that have more sensitive information are more valuable than others. So even if you're a small school, you might be really valuable because again, you've got social security numbers, right? That is kind of the role of the agent and the broker in the process of acquiring and kind of putting into place the right policy for the insured.
Now, wholesale insurance brokers have long been an established intermediary especially when it comes to hard-to-place risks or specialized products. Can you share a bit more about what are some key problems now with the wholesale market, and how does Sayata address those issues?
Our belief is wholesale brokers still very much have a important role in the industry, especially for specialty products. The reality is that your normal mom and pop retail agent is not going to know a ton about product liability insurance or cyber insurance or any of these more specialized risks where the coverages really need to be tailored to what the small business or insured really is doing and what their services are. Takes knowledge, experience, especially knowledge about past claims and what are the real watchouts on behalf of the insured. And so brokers have a really important role to play for that. We believe, and we think is going to continue. At the same time, I think there are more and more risks that your regular smaller business maybe never even dreamed of needing to get insurance for 10 years ago, let alone 20, 30. And now it's almost absolutely required, mostly because of contractual reasons. So because of history, because of lawsuits, because of previous claims, more and more larger clients potentially of a small business may require, in order to win this contract with me, you're going to need to have certain insurance coverages in place. And that affects, everything from the smallest micro business to, something making 50 to 100 million in revenue. And so now brokers have a ton more work to get those risks placed and coverages secured for many more smaller clients. And that's where I think it's something like Sayata, where we're a marketplace that makes a broker's job much easier to do, much more efficient to do. It comes into play. So essentially, we make it easier for them to say, if there's appetite out in the market for these smaller businesses, for some of the specialty risks that you need covered, we can very quickly tell you, here are the options. And then you as a broker working with your agent can decide what is the best possible ones for the specific insured that you're talking to, the account holder. And so that is, I think, something that is, it's important, right, to take advantage of the fact that more and more insurance carriers have digitized, have, basically made their appetite more openly available, taking advantage of that and not being bogged down in hundreds of emails a day for all of your accounts. Now, there will always be larger, mid-size and larger accounts where you're really building a tower. It's really complex, negotiated work really about writing a legal contract of insurance that covers many different aspects. That will always probably be very manual work, at least for the near future. But there's also more standardized products that just, need to be bound with the client relatively quickly in order to, move forward on a contract. And that's where we really, really come in and help take care of those easier, simpler accounts so that brokers and agents can focus on the kind of harder to place business that they see.
Now, with access to big data and better insights, cyber insurers or insurers in general have shifted from being risk bearers to guardians or advisors, incentivizing the insured into actions that would benefit both the insured and the insurer. So what are your thoughts on the shifting role of the insurer, and how do you think that will shape future relationships between insurer and the insured?
You're so completely right. So I'd say many of the insurance carriers we have and offer on Sayata now are, being proactive in the sense that first they try to scan ahead of time and see, because they have the domain name of the business, how vulnerable is it today? They can do a very quick scan and say, okay, we identified these like 3 critical and 15 less critical vulnerabilities. In order to bind the insurance, we need you to address the first 3, or we'll bind right now, but when it comes time for renewal, you have 1 year essentially. Please take care of the critical vulnerabilities. And I think that's like a very, really interesting kind of way to kind of nudge people, right? In order to, you're not saying, no, we won't insure you at all at the moment, but at some point, whether it's 90 days from binding or 1 year from today, you need to take care of some things we know are real problems and that make you more vulnerable than the, typical small business. And so a worse risk really, right? And I think it's really interesting because they have a way to push clients to actually take action. Some of them offer dashboards where you can actually, see all of those critical vulnerabilities. they really like walk you through explaining, for the smallest business, how can you address this, right? In very plain English type of terms. You don't necessarily need to have a CTO in order to do it. And I think that is something, I think it's very unusual, very little previous examples of insurance carriers that could basically, with just a email address and a domain name, say, here's a list of the problems with your company for the purposes of this insurance, right? You can pull it for things like, previous claims for property or other types of insurance, but not the same as actually, instantly being able to tell them, here are your vulnerabilities. And I think it's been really interesting because, we see that because it's such an optional insurance anymore, people are being forced to actually take some actions and kind of, address these vulnerabilities and change behaviors so that, they essentially aren't as vulnerable as they used to be. There's also some things though, like where I'd say just digitization period, like the changes in technology have actually moved businesses forward. So if imagine you're starting up a new company, right? You're not going to start with an on-prem one copy server that holds all your data. You're going to have some sort of cloud provider, right? Probably doing constant backups of your information. And so you're already kind of in a more secure place than if you had started the business 10 years ago. So there's some of that where just immediate like new practices and the way we do business has kind of increased security in some aspects, but in a lot of others, we are seeing the insurance carriers really take the lead and say, this is what we're going to require for you, and we might be the best priced option for you today, but a year from now, we are not going to insure you, or your insurance price might like quintuple, right? If you're not willing to take care of some of the risks that we know that you have. So it's really fascinating because they can actually tell if you've done it or not. That might be one of the biggest differences with other types of insurance is, sure, you can say, of course, I'm going to, make sure my, workers' comp insurance, I'm going to give like a health and safety training, to every new employee and refreshers once a year. Who's following up to check whether that's actually been done, right? It's very hard to follow through on that. Whereas with cyber insurance, since so much of this is really detectable online, they can actually see whether you're putting your money where your mouth is.
The insurance industry is in the midst of transforming, and we see new technologies being adopted. Now, what are some challenges and trends that you see in the next 5 years?
I think we're seeing a really interesting moment where some of the smartest players are basically saying, we're not sure if our underwriting models are going to win, or we should back this young, new, fresh startup that might have a better underwriting model than us. And so, what we do have is capital and a balance sheet, and we can really lend that out, and we can get a stake in the upside. And I think that is like, why the MGA model has really taken off. Now, the flip side, though, is the distribution, right? Because some of the older traditional carriers still have a far better, far more, maybe human touch, but very effective distribution system that is tough to topple. When you're trying to reach, especially smaller businesses, at the end of the day, it's who's talking to the insured. Who is that person? Because nobody, let me tell you, no insured is really going online and saying, I need to buy insurance. Let me just Google something and purchase it. I think that's kind of that, attempted disruption has been, I'd say, attempted really in the US and has not succeeded very well for at least in the business, in the commercial insurance space. So the last person to really talk to the insured still has quite a bit of sway, influence, and what they care about is potentially not the same as what the carriers care about, right? They want easy ways of doing business and servicing accounts for their carriers. And the traditional carriers, they're some of them are pretty great at it. Some of them are finding that they can't keep up with some of the newer entrants in the market. And so they have to make a call, like, where do we invest? We can't do everything for everyone. Are we the underwriting leaders? Are we the product innovation leaders, meaning we're creating the new cannabis insurance products or, the next crypto insurance products? Are we the balance sheet that's going and investing in what we think are smart people with interesting ideas for new ways of underwriting? Are we, or are we going to just try to acquire? We're also seeing that, right? look and see which model seems to be doing well, and then go and acquire it because we know we can't really build on our own. I think it's really fascinating because I think if I'm a traditional player, I need to make a choice. Where do I think my strengths are amongst those options? Because I certainly can't do all things for all people. And I think that's where sometimes I see a little bit of missteps, right? If you have a 5-point agenda for your next 5 years in terms of strategy as a traditional carrier, I think that's 4 points too many. I think you need to choose and say, this is where we're going to be known. And this is in 2029 or 2030, right? I'm going to be known as the place to come for innovative new insurance products, right? I'm not going to be the distributor potentially, but I'm going to be the one really kicking ass by getting an edge into new markets. Or I'm going to be backing the next, set of winners, right? I'm going to do my best to basically make my venture capital arm take off, or, be the balance sheet, be a collaborative partner, but ensure that the new MGAs always want to come to me first when they look for like capital backing and partnership. And so I think you have to make choices. I don't think you can do everything. I think that's what I see, at least in terms of the future. I do think a lot of the new MGAs, like some of the specialty ones, you're just going to be too small to really have an outsized impact over time, right? You're either going to have to be able to offer multiple things, or you're going to become part of a portfolio, or probably acquired and part of a portfolio. But only offering this niche one type of insurance, it's very tough. It's very tough to get enough scale and acquire customers profitably enough to, I think, last and to outcompete your competitors. So I think that's at least my predictions on both sides, on the carrier side and on the insurtech side.
Thanks so much, Upasana, for the great conversation. For our viewers, subscribe for both VC and tech content, and do check out Sayata at sayata.com.